If I had to only trade one model for the rest of my life, knowing everything that I've given out publicly, if I had to just choose one of them, it would be the second stage distribution of a market maker sell model or second stage reaccumulation of a market maker buy model. And I could make as much money as I ever want and never need to do anything else, look at anything else, and I'd be quite content with that. On a market maker sell model, I would be aiming for a pool of liquidity below the original consolidation. So there's sell side down here. I'm going to wait for a reversal. I'm going to wait for it to sell off and create another opportunity to sell off. But at least pierce 50% of from the smart money reversal down to the sell side liquidity. It has to drop at least 50%. If it drops 50% of that and then starts to rally again, I'm going to key that up with the other side of the curve where the market was rallying up before it reversed. I'm going to pair it up with something over there as a PD array that was bullish on that side, but now it's going to act as an inversion level. A lot of my charter members are going to have light bulb moments here listening to this. And that short is the second stage distribution or redistribution rather. And it's going to run quickly, the biggest powerful run right into the sell side. So what I'm waiting for is a unicorn setup where I'm waiting for the best of the best. Everything's in motion. I got everything on my side. Everything is in play for it to be there. And now I'm going to risk 5% on that trade. So I'm anticipating price reacting and reversing at the smart money reversal. Once it starts to break down, if it goes back up a little bit, that's the smart money reversal, low risk sell is the next stage, and then it'll drop. Then you get 2 points of redistribution where it sells off. The second one, which many times can look like the third, the second one after when you get the low risk sell, that low risk sell, when it drops down, its drop has to be at least 50% from the smart money reversal to where the sell side you're aiming for is. As long as it does that, then I will trust that the next rally is going to go right into a premium array on the left side of the curve before it went up to make the high and reversed. The caveat is the first sell off needs to go down 50% of the total range before you get to the sell side. Once that occurs, I know, because if you remember in the core content when I'm teaching market maker sell models and buy models, I give instances where that market maker buy model can fail to go to its target, much like a market maker sell model can fail to go to its pool of liquidity. Why would it do that? Because it's part of a larger continuation. So when and how would I determine when it's going to fail? That first leg of redistribution on the sell side, if it doesn't pierce 50% of that range from the smart money reversal down to the sell side liquidity, if it doesn't do that, then it's not going to go down there. It's going to be a continuation and reversal go the other way.